Hello, everybody. Happy weekend. It is the 13th of November 2010, and this is this weekend's technical analysis video. And what a wild week that occurred within the silver market. It started with massive gains towards the upside. In fact, since the Federal Reserve stepped in 2 weeks ago, the market went from 24 an ounce to over 29. That's a gain of over $5 per ounce. And if you do the math, 240 or $2.40 on 24 would represent 10%. Therefore, it gained over 20. And then last Tuesday, when it managed to reach this top, it sold about $3 per ounce in just a few hours, thus taking 10% down in a short period of time. The volatility is becoming wild. And when we had volatility in previous years, especially 1979 and 1980, this is nothing compared to what we've seen before. It was unusual times back then, but we're in unusual times today also. And those were days where 10, 12, 15% days were really not that uncommon. We've yet to have a 10% day in quite some time when you talk about open versus close, that is. And what we've seen on the sell-off was that it managed to make it towards this 5-day moving average, which is rising. And when you have a rising 5-day moving average, all sell-offs are guilty until proven innocent. So at this time, this sell-off was still guilty. But what happened was, I mentioned 2750 being a big level. You can see this purple line. That's the volume weighted average from this price. It got above that right in here. Here's the kicker, though. Oftentimes from failed moves can create fast move. It had a failed move above the 27.5 level, and thus it sold off even more to the downside, down to the 26 handle. The 5-day moving average is now declining. This will be the first resistance test of the 5-day moving average. And the last time it declined in here, when it had its first resistance test, the successful thing it did was it made this higher low. That's going to be the big thing. It's okay on the next rally for silver to make another lower high. This was a lower high. This is a lower low. So if it makes a lower high, what the secret or what the key would be to make a higher low. If it comes down and then manages to lift higher, that will make the moving averages start to roll over again. That's saying it's going bearish. It will break any of the key trend lines that are coming into play. That would be the secret, or not the secret, but the basis upon the trend analysis. Now, as far as Fibonacci is concerned, from this breakout level of 24 an ounce up to 29 and 1/3, if we take these levels and look at the 61.8 and 38.2%, we'll get figures that are roughly around 27.20 and 26. Therefore, 27.20 was up in this area here, and it was an area of resistance. One concerning bell is that it pierced it pretty big, and we're now down to the next Fibonacci level. So if this area can find a way to have a bounce, which is in coordinates with the 20-day moving average, it's in coordinates with this uptrend line that has been in place since the rally began in August, then this would be a good buying opportunity. If you're looking to buy on strength, like I said, you'd want to wait for the trend to roll over, start to make a pattern of higher highs and higher lows. As far as the resistance, you got this point here, that trend line that I drew that connects these levels. That's not a straight line, but the trend line that connects here and here. This 5-day moving average is a level of resistance, as well as this purple volume weighted average price since the market topped out. And you can even do some more Fibonacci. Let's assume 26 is where the bounce comes from. Then you can see that the 28 handle and 27.25 handle would be some big resistance, which is right here, and then 28 again as it continues to go higher. As far as on the downside, you have this 20-day moving average. 25 spot is huge because this area was 25 and not seen on this chart, that got up to 25 here and here in the after hours trading on the New York Times. So those are some big support areas. I can also draw a line to connect this line here. And if I do this and just move this line over, you can see that there'll be a trend line here that if we fall below, then I'm pushed down towards this trend line in here. Would really not be that much of a surprise. And if it continues to keep going lower, then you got this volume weighted average price since the rally began back in the month of August. Going to the longer term charts, this is the weekly candle chart for the silver going back to the year 2005. And we do need to develop some sort of support. We've got a small amount from this move here. That's still not much. And what I mean by that is either one massive candle, that would be scary, that could bring it down to this area in here, or even just a few candles that would just stabilize it through time or give it a small price correction so we can establish some sort of number of support. Now, as far as Fibonacci, this level broke out at around $18 per ounce. So if we put in $18 on the low, we'll get 24 and a third. This is 25. We'll say 24 and 2/3 and 26 and a half for the 76.4. So 26 and a half, which was the level that we're pretty much right below now, and 25, as I was saying, that big resistance level. That would be a nice area to come down and find support, because Fibonacci really hasn't been tested too much, and this is what this chart indicates. The green line represents a 23.6% Fibonacci from the 100-day low and the 100-day high. This is 38.2, 61.8, and 76.4. If you're above the green line, you are very bullish. If you're above the blue line, you're cautiously bullish. If you're in between both of these handles, then you are neutral. If you are below the red line, if you're in this area here, you are cautiously bearish. And below here, you are very bearish. So since this rally broke out in here, this is the first time it has managed to go below the 23.6. It took a long time for it to happen, which overall is a very strong indicator. At some point, it has to hit this blue level. At what level it's going to rise up at, well, that's tough to say, because I could have been saying here, and I probably did, at the 21.5 level, it's got to have to hit this at some point. Okay, it's got to hit it at some point here. So now this level's at 25. If you continue to have a big surge higher, then, well, obviously, like you see here, then this trend would continue to go up as well within the silver market. So what we're seeing now is that the intermediate term trend is trying to go bearish, but all of these longer term trends are bullish. As I was saying with the 5-day moving average, that when you have this rising, all the sell-offs are guilty until proven innocent. And when you have a declining 5-day moving average, all rallies are guilty until proven innocent. That's for the intermediate term time frame. For the longer term time frame, I like to use the 50-day moving average. And thus, because we have a rising 50-day moving average, all sell-offs should be guilty until proven innocent, as long as this moving average is rising, and especially if it is above that level. What I like about this chart is that we are able to make another distinguishable higher low. Because when we had this rally, we really never had any retracement. We had a small one in here, so we're like, okay, great, 23 is that higher low. Now, no matter what happens here, this 26 level at the highest is going to be the next higher low. Maybe it goes down to here or wherever, but if it does and continues going higher, that means it's going to be very noticeable after the fact that this level here is that of a significant pullback. People people will adjust their trading strategies based on that higher low. Maybe they'll adjust the stop so that if it keeps going up like this, okay, I'm going to put my stop right here. That's what some traders would do within the silver market. All right, so thank you for watching today's video, and have yourself a great week, everybody, and weekend. Bye-bye.